Welcome back, YouTubers. This is Tamara Manuel, broker associate with Benchmark Southwind Realtors right here in the Memphis, Tennessee area. I'm also known as Tamara the Realtor on Facebook and Instagram as well. I am a licensed realtor in Tennessee as well as in Mississippi. And my goal and my job actually is to educate and inform my clients as well as future clients on the home buying process and even the home selling process. And so today's topic is going to be, what is the difference between down payment funds and closing costs while you're going through the home buying process? Before we jump in, I wanted to just say right now, I want you to go below, click the thumbs up, like this video, send me a comment in the end, or maybe even while I'm talking, as well as subscribe to this channel. Go ahead and subscribe so that you can be the first to know whenever I'm on and posting a new video, because my job and my goal is to educate, to give the information that you need so that you can make the best decisions for you and your family, and you can do so in a very informed manner. So go ahead, like, comment, subscribe, and I'm going to jump right in. My only things that I'm talking about today are two of the expected expenses during the home buying process. Those two are down payment funds versus closing costs. Okay, a lot of people think that these two things are the same expense, but we use those words interchangeably, but they are two totally different expenses. And I'm going to give you some examples of how much those amounts might be, as well as what's the difference in, what do they consist of. So let's start off with talking about down payment, right? Right now in 2019, there are more cases in which you're going to have to pay a down payment than not. There are a few 100% loan cases. For example, veterans. If you are able to get a VA loan, then your loan is going to be a 100%. You are not required to pay a down payment. But for most of us who are going to get either an FHA loan product or a conventional loan product, we have to pay a down payment. The main reason why we have to pay a down payment is because it is your investment in the purchase of your new home. So the lender is not going, or they don't want to take on 100% of the risk of your home purchase. The lender feels that if they are going to give you the majority of the money that you need in a home loan, then you could give a small portion of that mortgage loan yourself. So let's talk numbers. A $200,000 home, if you're going to get an FHA loan where the down payment requirement is you putting down 3.5% of the purchase price, then that means the lender is going to take on 96.5% loan. They're going to give that money to you. Well, for a $200,000 home, that's $193,000 that they're going to give you in a home loan. The lender expects that if they're going to put forward that much risk, the least that the buyer could do is put down a 3.5% investment into the purchase of the home, which means if they're going to pay $193K, you're going to pay $7K. So it is your investment in the purchase of this new home. There are some programs that are out there that can assist you by giving you down payment assistance. However, anytime some outside agency gives you money to pay the down payment on your behalf, generally speaking, there's going to be some sort of requirement that is attached to that. So one possible requirement, if an outside agency gives you down payment assistance, then they say that you have to be in the house for a certain time frame. They may say you cannot sell this house, or lease this house, move out of this house for a period of 10 years or maybe 5 years. And that's not always the case. That's just an example. However, if you're going to get down payment assistance, generally speaking, there are some stipulations attached to that. It could be income stipulations, it could be location-based stipulations, or they can actually put criteria in place that says you have to be in this home for a certain amount of time, otherwise you pay us this money back. All right, so down payment is nothing but your investment, what you are putting or bringing to the table when you purchase a home. That's down payment, okay? Let's talk about closing costs. Closing costs are all of the fees and costs that are incurred when purchasing a home that take the ownership of that home from the previous owner to now you as the new home owner. Closing costs can include things such as title search, title insurance, attorney's fees, loan origination fees. You know, that loan officer that's working so hard to make sure that you get this approval and this home is now yours. Well, that lender has to be paid. They originated that loan, and so that person has to be paid. Your attorney, the attorney's fees are also included in the closing costs, because the attorney that processes all of the paperwork, and it's tons of paperwork that has to be completed and filed and recorded, that attorney has to be paid for his services as well. You've got prorated taxes. You're going to have to pay for taxes for the year of the time frame that you actually own that home for that particular year. So let's say, for example, you move into a home in August. Well, you're going to pay the taxes from August to the remainder of the year. Okay, so those are the prorated taxes that you're paying for. Closing costs also includes what's called an escrow amount, which is nothing but a piggy bank that the lender uses to put funds in for next year's taxes, next year's homeowner's insurance premiums. It also includes mortgage insurance premiums. So all of these things are a part of closing costs. They have nothing to do with what you put down on the home, but they have everything to do with the amount of money that it costs to get into the home. All right. Recording fees, wiring fees, discount points. Sometimes people pay discount points to make their interest rate a certain, amount or a certain percentage. Appraisal fees. When you got your credit pulled the first time to get the approval, there's a fee for that as well. So there are several fees involved with getting you into the home. Those are your closing costs. Now, closing costs can range anywhere from about 3% of the purchase price to 6% of the purchase price. Let's talk about if you are purchasing a $200,000 home. If your closing costs are 5% of that, and of course, your closing costs is going to depend a lot upon what kind of homeowner's insurance quote you got from an Allstate or a State Farm or Progressive or Geico. That's going to depend on, how high those closing costs are pretty much going to depend on. They can vary based on your homeowner's insurance quote that you got, as well as what are the taxes on the house. If the house has higher taxes, obviously you've got to pay a year's worth of taxes as well as prorated taxes for the current year. So if those taxes are high, your closing costs are going to be high or higher. So several things are, we cannot give you an exact amount until we know what the property address is. We know how much the taxes are. You've gotten your quote from the preferred insurance company. So it could range anywhere between 3 and 6% of the purchase price of the home. So a $200,000 home, if your closing costs are equal to 5%, that means you've got to bring $10,000 to the table for closing costs. $10,000 plus the 3.5% that you were bringing for your down payment, that's $7,000. So $10,000 and $7,000 is a total of $17,000 that would be expected as the amount of money that you need to bring to the table. I get a lot of people to ask me questions. Well, can't someone pay closing costs for me? Yes, the seller can pay either a portion of your closing costs or the entire amount of your closing costs on your behalf as the buyer. However, if we are in what we are currently in, which is a seller's market, where there are multiple offers on one property, you've got one property and you've got 5 offers on this property. If you are asking for closing costs to be paid by the seller and these 4 are not, guess what? Your offer more than likely is not even going to be considered. Okay, so yes, the seller can pay closing costs on the behalf of the buyer. However, if there are multiple offers on the property, the chances of them actually paying those closing costs on the buyer's behalf are slim. So 2 totally different expenses, 2 totally different amounts. And if you're not getting any assistance from the seller for closing costs, or you're not getting any assistance from an outside agency for down payment, then the buyer is responsible for those 2 amounts. So keep those things in mind as you are thinking about purchasing a home, how much money you need to be saving. It's always best to talk with a realtor. And not just any realtor, but one that is very informed and knowledgeable and understands that there are several things involved in this, and they need to be putting you on a path so that you can have a good understanding and make the best decisions for you and your family. I would love to have you as a client. I would love to see you, see your number in my phone. I would love to see an email from you. Don't forget to like, comment, subscribe to my channel. And if you or someone that you know is interested in purchasing a home, I would love to have an opportunity to sit down and talk to you one-on-one about this process. My job, again, is to educate and inform, getting a call here, is to educate and inform my clients as well as my future clients. So please feel free, if you have questions, any additional questions, please feel free to comment or inbox me, send me some information or about questions that you need answers to, and I would love to help you out. Thanks so much for watching. See you next time.